Despite the country's economic recovery beginning to flow, the fall in real wages for workers has meant for many people across the UK they have had to cut back and tighten their belts. In fact, the ONS said at the start of the year, real wages, pay packets compared against the cost of goods, have dropped 2.2% since the first 3 months of 2010, a trend the North has not been immune to. Such is the importance of this economic indicator that the Bank of England has stated it won't raise historically low interest rates until it begins to see real wages rise. So what's been going on with pay packets in the North?
Even the Bank of England has admitted we're not entirely certain what's causing the decrease in real wages continuing, particularly as the economy as a whole has been growing strongly for 9 months now. We'd have expected to see real wage growth pick up. It's a confusing environment. To be truthful, we've not been through a recession like this, fundamentally credit-driven, before, so we're in a new era in terms of trying to understand what's happening. Certainly, we think the very large growth in self-employment is probably one of the things that's putting a dampener on aggregate wage growth. Though we do know some sectors are performing well, manufacturing, construction, and even some of those low-paid jobs in retail and hospitality and leisure have been seeing 2.5–3% wage growth for the past couple of years. So there are sectors where it's performing well. Government legislation on public sector pay rises is keeping that sector down, so that's affecting the average figures. And particularly banking and finance is still unwinding itself from the crisis of 2008. So wage rates there are down, and that's affecting the economy overall.
Ed Miliband, the Labour Party leader, has capitalised on this economic phenomenon and attacked the coalition government with a cost of living crisis campaign. But is there a crisis? Or is Miliband off the mark? IBTimes UK asked market traders in York what they thought about it.
Yeah, I mean, it is quite hard for some people. I mean, you've only got to look round, not particularly, well, even our stuff. It all comes by road. Everything's going up a little bit in price. If you were to look at us and look 10 years ago, we were selling stuff for roughly the same price. We can't get any more for it, but we're paying more for it. So it is. Some people are very much conscious of what they've got in their pocket.
People like to wander around markets looking for bargains, and the market isn't the place for bargains anymore. It's your large shopping areas, your shopping malls, your big mainstream supermarkets. They're the places where you get the cheap product now.
In terms of the increase in wages, that's probably the biggest challenge that still faces the government, because obviously for the first 2 or 3 years there was quite serious pay constraint both in the public sector and the private sector. Private sector wages are beginning to rise significantly faster now than public sector wages. And I think that is a challenge for the parties who are in the coalition government, simply because people aren't necessarily seeing money in their back pockets.
So, with wages struggling to keep up with the rising costs of goods, what can employers and policymakers do about the problem?
We've been a very big supporter of the living wage, and we're the first council in Yorkshire and Humber to introduce the living wage. That's taken 900 people of our lowest paid employees up to a higher level of pay. I'd like it to be higher, but that's not currently what we can financially afford. But that helps get people off benefits, it helps people have a decent pay for the work that they do, and I'd like to see more companies be able to do so. Aviva have signed up to that, various other organisations in the city have also signed up to the living wage, and we're trying to encourage more and more.
We have done quite a lot in terms of increasing the threshold for before you start paying tax, which has had a significant benefit, but people don't see their wage packets going up.
So, could poor real wages stop the economic recovery in the North?
In terms of recovery, it's a risk. We don't yet see it as being a major one, but we've seen odd pictures, like consumer spending has been picking up solidly now since the early part of 2013. Retail sales are growing 3–4% a year on average. So there's consumer confidence has recovered and consumer spending has recovered. The question really is actually where is that spending power coming from?
I imagine in the next couple of years we will see wages begin to rise faster than they have done in the last 2 or 3 years. That's not likely to come before the general election. I would hope that people would recognise that the good growth that we've seen over the last 12 months and the likely better growth over the coming 12 months will make people recognise that wages should rise in the future, even if they don't rise before the general election.
And what does Councillor Alexander think about the situation? After all, Here's party leader Ed Miliband could be Prime Minister after the 2015 general election.
What I would like to see is, over the course of the next Parliament, the living wage become the default setting for the minimum wage. So the minimum wage could be uprated annually based on key economic tests, and if the country meets those tests, then the amount of the minimum wage would get uprated, and we could then use the money that's being spent in the country on tax credits to be able to support tax incentives for individual businesses so that we can still be internationally competitive while people still get a decent wage.
As the campaign trail hottens up, we will be sure to hear more about the cost of living, but it seems things are improving, albeit slowly, in the north. However, maybe that recovery will come too late for some politicians.